Oh boy, here we go, baby. Back to work here tonight. It's Wednesday evening already. We got CPI Thursday coming at us hot tomorrow morning. Got a lot of great trades we're tracking for tomorrow. Expecting a very busy CPI Thursday. I want to make sure you guys are ready to make some money tomorrow. As always, I'm going to cover all my favorite trades in this video tonight. That way you get a game plan to make sense of that mayhem that comes after the CPI report to make sure you guys know how to make money on the CPI number for tomorrow. We have a lot we're going to cover in a very important video here tonight. Before we jump in, though, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoyed the video, do me a favor. Will you hit that like button and drop me a comment in the comment section. Give me a holler in the comment section. Thank you guys for stopping by and tuning in here tonight and supporting this YouTube channel. But enough of the intro, right? I'm a few minutes behind. CPI's not going to trade itself. Let's get ready for what might be a very, very good Thursday trading session tomorrow in our trade room. Well, boy, everything is very bullish right now, right? We pretty much picked up today where we left off yesterday. Bull markets right now on the S&P, bull market on the Nasdaq, bullish into a trading range on crude oil. There's no doubt about it, right? Buyers right now, buyers are definitely looking for pullback opportunities here. Buyers are certainly on the oil looking for breakout opportunities here right now. So no shortage of buy setups on my radar, but you can see for yourself, right? We have just a ton of resistance overhead. We'll talk about this as we go deeper here tonight. We've made a really big move the last couple days. It's a long-term bear bias still. I know we're very bullish right now the last week or so, but I'll tell you right now, the reversal potential, right? This CPI number could be slow walking us right into a buzzsaw. The reversal potential for tomorrow is huge. I think the CPI reversal might be a late Christmas present for us. Might be one of the best trades of the week here. Now, we got to be careful, right? We can't just go trying to pick a top ahead of that big CPI number tomorrow. So we're going to talk about some really great reversal patterns I have setting up for tomorrow. So pullbacks, breakouts, reversals, we're going to cover them all here. Oh, don't you worry. By the end of the video tonight, you're going to game plan to make some money. Now, speaking of tomorrow, though, let's hold on. Back up the truck, right? Tomorrow is not exactly your average Thursday. We've got, of course, the biggest news of really could be of the month tomorrow, right? Is this CPI number? Now, let's be very clear here. Over the past few 6 months or so, every CPI number has been a complete violent reaction, right? So please be careful. I'm gonna cover my plan tonight. We'll go over some scenarios for tomorrow. The most important thing I want you to kind of remember for tomorrow is I would not invest a single second or a drop of your energy into what the news is or what the talking heads on CNBC are saying. The news tomorrow has absolutely nothing to do with how we are going to trade it. Well, if that's the case, then what does it do? The reaction to the news. Because you'll see a lot of times, guys, the world is such a complicated place out there. The markets are obsessed with this inflation, so I'm not going to waste your time by talking about if it's higher or lower. I wouldn't waste a second of your valuable day today or tomorrow. I would simply wait for that number to come out, and tomorrow morning we'll let the dust settle, right? 8:45, 9 o'clock, we'll let the dust settle, we'll pick up the pieces, and we'll trade the reaction. So please be careful overnight. Please be careful in the pre-market. And please be careful tomorrow around that 8:30 number. Don't gamble around that number, right? I mean, we want good, consistent trades. You can lose a lot of money on these big swings here. And so save your bullets, right? The best stuff will come after that number comes out tomorrow. And of course, we'll talk about the game plan we have here in this video tonight. And be aware, right? This thing likes to whip around that CPI number. So tomorrow morning, the place to be is in the trade room. Update our charts after it comes out, and we'll go forward from there. All right, back to our charts, though. Again, this is where the money is made. Don't focus on the CPI number tomorrow, right? Trade the reaction. Now, of course, we're going to cover this. So S&P's ready, Nasdaq's ready, oil's ready. I'm going to cover all my favorite trades across all three of these markets. Make sure you watch all the way to the end. If you like making money, make sure you watch the entire video here tonight, because I will cover different trade ideas, different tactics as we go deeper into this lesson. Starting off here first on the S&P 500, also the E-mini S&P, the SPY. First of all, these are all tick charts. You can find all the time frames in the upper left-hand corner. That is the 21 EMA, exponential moving average. And be aware, the S&P is very similar to the Nasdaq. The Nasdaq is very similar to the S&P, so they're very much interchangeable. So I'll try my best not to repeat myself too much as we talk about these back and forth here right now. There are a lot of key insights on this chart right now, but to boil the whole thing down, right, in a nutshell, the most important thing that we have right now is we have a very strong move. Strong moves tell us to expect a pullback and a retest, right? So we know that buyers are looking for pullbacks right now. However, we're pretty high up right now, right? I mean, besides that little shallow pullback that we saw today, it's been look at that, right? That's a pretty big move. And as we talked about last night, as markets make these really big moves, we got to be very careful buying high. We want to buy nice and low. So that's going to play a big factor in it. And again, there's a lot of resistance on here. Now, these are just the resistance levels on this 8,000 tick chart. I have there's a really interesting chart right now on the 4-hour, and I'm not going to go over all the different time frames here tonight. What I will do though is I'll toss a really cool screenshot if you want to kind of see the key levels, some additional range, some additional analysis. I'll drop a screenshot for all three of these markets, and you can see some larger time frame levels of resistance. I'll drop those in the description of the YouTube video here tonight. So grab those links and you'll see why I say it's not just these levels, right? There's a lot of very key levels of resistance on the 4-hour and the 60-minute. And if you want to get those, you can get those in the description of the YouTube video. So boil it all down, we're very bullish, but we're very high up. We're very high up, and we're not quite there yet, but we're running into overhead resistance. So knowing this is the case right now, right? Knowing this is the case right now, when I see a chart like this, and again, remember, we really got to be, a lot of this is up in the air right now because of that CPI number for tomorrow. But all things kind of equal here right now. When I see situations like this, strong move in one direction, the best way that I know how to make money, and my favorite trade for tomorrow is to get a nice deep pullback. That way we're not buying too high. When we get that pullback running into support, I want to get below that 21 EMA. One of my favorite trades in a trending environment like this is getting a nice deep pullback and getting below the 21. And then if I can get the bears coming in and trying to sell, right, for that reversal. Remember, anytime we see a strong move like that, as we talked about last night on this very same video, we're expecting a move back to that high. One of my favorite trades is if I can get those bears to fall for this little head fake, right? These shallow pullbacks in a bull market. If I can get them to fall for that trap, I can then use their stops as fuel for a run back up to retest the high. That's one of my favorite ways to trade a strong kind of bullish move like this. Now, I call these failures, and oftentimes these failures will pop up. They'll pull back to that 21 moving average, and we'll get the pullback. Now, I talk about these a lot in the free trading course, right? These failure into pullback, right, combinations. Now, once we get back up to retest the high, now, as we say in our trade room, mission accomplished. We have a strong move up. We get that nice deep pullback. We trap in the bears, use their stops as fuel, and punch it back to retest the high. Now, remember, at this point now, the buyers have to prove to us they want more, right? The buyers have to prove they want more. We get a lot of resistance up overhead. What I'd love to do is, and this is where some of those reversals come in handy for tomorrow, I'd love to go in and see if I can get some rookie traders to take the bait. See if they'll come in and try a couple times to buy off that high. Remember, this is a horrible place to be buying, right? You're not buying at support. You're buying into resistance. Professionals are buying down here, right? Rookies are buying up here. Professionals are taking their profit up here, right? A lot of rookies will buy up here. Once they do, where are their stops, right? Same thing. Remember, guys, the easiest money you're going to make in day trading is when you can use stops as fuel. Now, I call these two-try failures, right? So failure pattern off the low, failure pullback pattern, right? And then this is called a two-try failure. The reason why I want a two-try failure is because we're so bullish, right? Or in this case, right, we're bullish right now. So buyers try once, buyers try twice. I'm going, okay, where are your exits? I'm going to sell right into those stop losses. Now, this is where the party begins. This is where the fun starts. Because with buyers trapped right now, when buyers get stopped out, what happens? They have no choice but to sell their way out. Now, think about it. Sellers are selling off the high. They're taking profit, right? Bears are shorting that double top. The buyers are caught. They're getting forced out, and these oftentimes will really punch and run lower. Anytime we see these double tops that punch like that, I love to go out, watch closely here, find a new channel by drawing off the low, pin it right up around the high. Okay, I call these hidden channels, or as my students call them, professionals channels, right? Because very few people know how to draw them in real time. Then, most important, look left, find some prior swings, and you want to grab that first test off the high of that channel, right? Now, this could be any of the entry patterns that you guys are learning in my free trading course, right? It could be a bull trap, like this example, right? It could be a buyer failure pattern, a pullback combo, a strength move, right? Going lower, right? We talk about these inside the free trading course. Oh, and speaking of which, right? I know that most of you guys and gals have taken this free class, right? By the way, I love the emails you guys are sending me right now of all your winning trades off this stuff you're learning in that free class. But I know a lot of you guys are new here for the new year. So if you haven't taken the free class yet, what I want to do is I want to give you the same strategy I teach all of our students. I'll put a link up here for you in the upper right-hand corner. Grab that link and take my free trading course, because the strategy that I teach in that free course will show you a stupidly simple trick to know where the best winning trades will be each day. You'll laugh how simple it is, and I'll show you 4 simple entry patterns to help you kickstart you making money on your live account. Guys, if you're missing the best trades right now, if you're sick of taking so many losses, take that free class, grab that link. It's perfect for someone trying to be a full-time trader, especially because it'll give you a roadmap to follow each day. So anyways, grab that link, and that will show you how to trade this whole sequence, right? That pullback, that failure, right? Again, failure off the moving average, pullback combo, that double top, and then whoops, trap in all of the buyers, right? And run it back down with that new hidden channel. Now, if we can get that short, right, where do you think the bears are going to want to go? There's a range down there. Ranges act like magnets, and of course that will be a good objective, right, as we go lower. Now, hopefully by now you're wondering, okay, well, that's kind of my favorite trade in these situations. What if that fails, right? What if that fails? So here's something to keep in mind. Let's say now we pull back to that low now. And don't you worry, I'm going to cover going higher here. Oh, you better believe that. We'll cover that a little bit later on in the video. I want to make sure you guys know the reversal on this if we don't get that pullback and retest the high. Let's say now we pull back now to that low, but now the bears don't come in and fail for an easy long. No, right? Now they hold that pullback and they jump off that moving average. We call these 1, 2, 3 reversal patterns. Okay? Remember, anytime we see a strong move, what do we expect? A pullback and another leg. Okay? These are very, very easy to trade. All you got to do is draw a trend line off that low, bring that trend line. What I usually do is go up around that big high, right? Up around that big high. And then what did I say before? Look left. Find some prior swings. I love traps. We talk a lot about traps in that free trading course. My favorite of all of them are traps. It could be a trap pattern, right? Get above the moving average. Buyers come in, try to buy it. Their stops are just waiting to get rung, and we hit those stops. that failure, that pullback. Now, where is a good target after a 1-2 jump, 1-2-3 reversal? Where's a good target? Easy. First leg, third leg. Okay, these are remarkably accurate. The key is you got to watch the size of that first leg, right? We grab the entry off the top of that channel, and then once we know how deep that pullback is, then we take the size of that first leg and we bring it down and go, bingo, that's our final target. Okay, you'll be amazed how well that works to squeeze as much profit as you can out of that trade. That's the way you grow your account really quickly, right? It's also how you get over losses too, right? By squeezing as much as you can out of your winning trades. Okay, that's one reversal I love as well. Another one would be, let's say, for example, this thing just gets crushed, right? Because again, hello, right? You might have heard there's a little bit of news coming out tomorrow, right? So what if it just gets crushed, right? What if it pops up and just gets crushed running lower? That happens a lot right now, okay? If it just gets crushed and runs lower, what'll happen is, it's not going to pull back and jump. You know what I mean? That's a 1-2-3 move. That's a 1-2-3 reversal. If it just gets crushed and starts rolling lower like this, that one is even easier because now you can probably guess, right? Draw a trend line off that low, draw that channel off of that high. Are you with me on this, right? Go out, look left, find some prior swings, and oftentimes it'll keep on grinding down. Remember, do not sell low, sell high, sell at resistance. Get that pop up. Get above prior swings. That's where traps live. Get above the moving average. That's where punch it, where those failures live. And again, right, first leg, third leg, that'll help you fine tune and really wring out as much profit as you can out of that trade right now. So that's if that pullback, right? That's if that pullback was to fail. Now, the most important question we have right now is what if we don't pull back? Right? What if we don't pull back? What if we go sideways up here? We could easily get one of these guys, right? A range here tomorrow. And what if we pop up? How do we get some reversals off this high right now? These are really, really important topics here for us. Let's keep this party rolling and let's go to the Nasdaq. Right? Now, again, on the Nasdaq and the S&P they're very, very similar. What I want you to do though is, again, down in the description of the YouTube video, I've got a 4-hour chart posted down there. Like I said, right, we have a lot of resistance just on this time frame, right? But when you see where we are on the 4-hour chart, you'll see why. Again, we're very bullish right now, but I'll tell you, a lot of times what happens is, and I don't want to sound like a conspiracy theorist, right? I do not have a tinfoil hat on right now. All kidding aside, though, a lot of times they'll walk these things right up and then bam, right, drop them right back down again. So we'll check out that 4-hour chart, the description, and you'll see we're in a very suspicious area right now. I would not want to be a buyer up here, even though who knows what's going to happen with that CPI number here for tomorrow. So anyways, long story short, same game plan, right, on the Nasdaq if we do pull back, right? If we do pull back, it's that same failure, right? Pullback, reversal, same thing, right? That double top, reversal, same game plan I just talked about. The next thing I want to talk about here now is as we go higher, right? Let's get rid of a couple of these levels overhead. There's a lot, as you can see, and that's just the fast time frame, right? That's just this 4,000 tick chart. Anyways, what if we go higher here? Now, if we go higher, did you watch last night's video? If you watched last night's video, we talked all about last night how the money to make today will be what? It'd be bear traps, right? Now, why did I say that yesterday, right? Why did I say bear traps were the best way to make money in last night's video? Because we were bullish, but we're way high up, right? Way high up. So what you want to think about here is if we do keep going higher, remember, we're still very bullish, right? So we can definitely buy pullbacks, but you have to be in the mindset tomorrow of if we rip higher, right? If we do end up going higher, it's those, well, as we always say, strong move, shallow pullback, higher high in price, and bear trap. Now, what you want to think about on this is connecting some of these highs, right? Finding those channels and using these channels as key levels of support. You can see an example like this one, right? As we did today, we draw those trend lines off the highs, we bring them right down to that low, right? See how we draw those channels backwards like that? Right? You draw them off the highs, draw them backwards, and then as we're grinding higher, we're not buying this thing high, right? You're waiting for it to trap low, waiting for bears to come in and get short and punching them. There's a reason why that was the strongest move today, because everybody was waiting for the bear trap that we talked about in last night's video, right? And by the way, did you make money today on the bear traps? If you did, can you give me a hell yeah? Right, maybe a cha-ching in the comment section. I got a lot of great emails from you guys here today, so I was happy to see that people followed kind of the guidance or the ideas right from last night's video. So as we go higher, one bear trap, right? As we go higher, we described a lot last night. And we're looking for more right off the low of that channel. What I would also really be kind of keeping in mind here is this type of bear trap, right? There's another kind of variation of a bear trap here. So let's say we jump higher here. We run right into, right, that overhead resistance, right into a lot of resistance. And then we really sharply pull back, right? Not going to get that bear trap on this one, right? Because that sharp pullback. Now, what do we do in that case? We do is, anytime we see a strong move in one direction, what do we expect? Right? A retest of that high, right? A pullback and a retest. Now, we might get a real strong pop going lower because you're running into major resistance. So what do? You get below the 21 moving average. You wait for the bears to come in and try to get short, and you use their stops as fuel. Remember that from earlier on the S&P? That's the game plan, right? So we pop up, we don't chase it, right? We look to trap in the bears below the moving average. What I'll do tomorrow is find some larger channels, right? Trap those in. That'll be a benefit of being with me tomorrow in our trade room. We open up at 8 o'clock Eastern time. I'll put all the links you guys need the description of the YouTube video, but think about that bear trap right there, right? This is called a seller failure pattern, right? Not exactly a trap setup that you guys are learning in the free trading course, right? It's a seller failure. And again, there's a lot of variations of these: failure into pullback, right? And then back up to retest the high. And then remind me, right? So failure, pullback combo. Remind me now, what do we do once we retest the high? What do? We then look, again, we're at major resistance. Do buyers come in? Try once, try twice. Can we use those stops as fuel and that punch going lower? Find that channel, and then don't miss that first test, right, off the high. I'm obviously keeping this pretty simple right now. We talked a lot more detail in that previous chart, but that's another bear trap, right, as we go higher here. All right, so keep that in mind. Bear traps on the way up, and then as it pulls back, trapping those bears below the moving average. Okay, now let's get a little more serious. Well, I guess we're always serious within reason, right? Let's get serious about what reversals might look like as we're going higher here, and then we'll talk about ranges on the oil, all right? Because we may see a range tomorrow as well. We'll wrap up with a range on the oil tonight. Let's say, for example, we run up. Right now, as we're pulling back right now, we don't get that deep pullback, that trap and go. Now what happens is they pull back to the 21 and they try to take it higher again. They fail. We pull back again. They try it again and they fail. These are called crown reversals. Remember, anytime we see a strong move in one direction, we have to give the buyers the benefit of the doubt. We're very much bullish right now. We are. There's no way around it, right? We're very much bullish. But again, I like the idea of the reversal, one, because of all this darn resistance on the 4-hour chart right now, and two, I've been around this business long enough to know that these CPI numbers, these big news numbers, when you get these big trends that kind of slowly walk their way up like this, it just kind of smells like something's cooking, right? And there might be something that we don't know coming in the corner, right? That reversal. Now, again, I can't pick a top on this. We're too bullish to pick a top. But if I can get these buyers to try once, if I can get them to go lower, right? Buyers buy low, right? They try once, they go lower, they try twice. The way you kind of pick that top, if you will, is that crown reversal pattern, okay? These are one of the advanced reversal patterns we talk about in our membership classes. I have a lot of examples of these, though, in that free trading course I mentioned linked up in the upper right-hand corner, right? Another reversal that you want to think about is that move up, right? That strong move, that pull back, that double top off that high, and same thing. 1, 2, grab that failure, 2 try failure. Why? Because you're going against the trend in this one. Drop it and then find that, right? Find that channel. And again, I'm simplifying this quite a bit. What I like to do is as it runs lower, right? As it runs lower here, I'm going out, finding that channel like that. I'm looking left, finding those swings, and we'll use, bull traps, buyer failures, right, for that short. Right? And again, look for these ranges down below to be really, really juicy targets, right? As we go here, right? Makes sense? Okay. One more, right? One more I want to talk about is the V-top. Okay. V-tops are very, very common in news events. Let's say we punch up right into that news and it just gets whacked right back down again, right? We don't pull back and try a couple times, right? We don't pull back and go. No, the thing gets whacked and begins to grind with this slow grind down, right? That slow grind down. I know these are tough because it's frustrating not to be able to get the short that high. But guys, our job is to find high percentage trades, and that's just not a very high percentage trade trying to pick a top on this, right? If you want to make money consistently each day, you be very careful when you're going against the momentum of the market. That's why we give the buyers the benefit of the doubt by using those 2 tries up there, making them actually show us they're trying to buy, and then use their exits as the catalyst, right? The stop loss, the stop run up there is what puts the odds on our side when you're going against that momentum. Anyways, I'm getting off track here right now. I get kind of excited talking about this stuff, as you can see. Draw that channel, right? Find off that high. And again, right, these are one of my favorites. I mean, I can't say guaranteed, right? But these are about as close to a guaranteed money-making trade you're going to find in trading, right? The V-top goes up, and again, right? There's a lot of variance to this. If it does rip up and then crash back down and begin to grind going lower, that grind basically tells you the buyers are walking away. It's in a free fall right now. It'll oftentimes be a slow grind. These are oftentimes very slow, and that's because it's not sellers who are selling, right? Those slow grinders like that, those are not bears coming in and selling, right? These are buyers who are getting out of their positions, right? These are buyers going, oh shoot, right? Get me the heck out, and they're getting out, and that's causing it to kind of grind down. Now, the follow-up trade, this is the one that usually really rips, right? Because everybody's like, just give me a chance, just give me that bull trap above that high. And again, I love bull traps. You could be a bull trap, buyer failure, pullback combo, strength trade going lower, right? Again, you'll learn those entry setups in our free trading class. And then don't forget, right? First leg, right? Remember this from earlier? Whenever you see a reversal, pay attention to that first leg. And then once you know how deep the pullback is, then you can take the size of that first leg and pin it down. And again, you can wring out all that profit, right, as it rolls back down that hill here for tomorrow. All right. I like the way this sequence is starting to look here right now, right? Buyers want to buy the bear traps, right? As we go higher, sellers are looking for reversals. Sellers have to be very careful with reversals because we're still quite bullish overall. Now, the $1,000 question for tomorrow is, what do we do with a range? All right. It is always very likely, whenever we have a big news event, that the end of the day or the day comes to an end with some sort of range. And I'll tell you right now, the sooner that you learn to make money in ranges, you'll be unstoppable, right? Because anybody can make money in a trend. You know the old saying, right? A strong trend makes everyone a genius. Look at the last 10 years, right? Everyone's a genius when the price keeps going up, going up, going up. When things start chopping sideways, That's what separates the men from the boys, right? The pros from the rookies, right? That's what separates the professionals from the amateurs, is how to deal with ranges. Not every day will be a strong trend. Let's talk about the oil here right now. Think about this as a very good potential template for the S&P and the Nasdaq as well here. And as you can see, I like to give you guys a reason to stick around all the way to the end. I'm not going to give you guys all the good stuff towards the beginning of this video. I'll make sure we weed out the people who really don't want to be traders, right? By the way, if you're here watching right now, 30 minutes into this video, it takes patience. It takes, an attention span to be a professional trader. So kudos to you. Congratulations. If you've made it this far in the video, you are the person that I make these videos for. And if you're dedicated enough to watch all the way through to this point, you got to find whatever it takes to get with me in the trade room, because you'll do very well if you put this amount of effort into my trade room. So first of all, what's the biggest takeaway right now on the oil? The key component, again, there's a lot of stuff going on right now, but to kind of ring it all out into what's most important right now, it's a bull market into a trading range. Okay, that's the most important factor. In my trade room, we call these directional ranges. Okay, directional ranges are a pretty straightforward idea. Now again, I've got a 4-hour chart, a 4-hour and a 60-minute chart on the oil, and I'm going to drop that in the description of the YouTube video, because again, this is just the fast time frame. There's quite a bit of resistance overhead that we do want to be aware of, and again, you'll see what I mean when we get there. Now, when it comes to bullish bias ranges or directional ranges, okay, what we're looking for is as the market goes lower, ranges act like magnets. And so buyers are trying to ultimately trap in the bears, right, and go back up into that trading range, right? A lot of this is very similar to what we talked about on the S&P, right, at the beginning of this video. Sellers, of course, right, they want to hold this pullback and reverse it or break it out, right? So basically, as we pull back in a bullish range like this, buyers are buying off support below the range. Sellers are hoping those buyers will fail and for a breakout, right? As we go higher, it's very simple. As we go higher, right, we know that ranges are magnets, so we don't buy breakouts, right? Sellers would love to see a buyer failure, right? And I'll tell you right now, one of my favorite trades is when you see a fake out breakout. Right? They pop up, the buyers can't keep it going. I'm going to talk about a breakout in a second here. The buyers can't keep going, and what happens is the amount we go above the range is oftentimes equal to the amount we go below the range. So these can really get good. These reversals off the high, you can short the reversal, you can short the pullback, and oftentimes these things get so strong that they kind of spit out the other end, right? These are a lot of times what those kind of blow off tops look like, where they pop above the range, they can't hold the breakout, and the thing just collapses right back down, right? Trying to get back to the other side of that trading range. And because that momentum is so strong, it oftentimes produces a full-blown panic, right, sell-off on whichever market is. Again, this could apply on the S&P. The next thing too is because we know that ranges are magnets, the buyers, if we do get a breakout, they have to hold the pullback and go, right? As I say in my trade room, they need to prove it to us, right? Because if we get up, but they can't hold it, again, we're gonna crash right back down to that trading range. So buyers have to show us some proof, right? And then we'll go into some breakout patterns going higher here, right? Makes sense? Now there's a big range overhead, right? There's a big carrot right up there to attract these buyers. A lot of incentive for the buyers there right now. But again, we're way high up right now. We have a lot of resistance. You'll see on that chart I linked up here. So it's a relatively simple idea. If we go lower, right? If we go lower, we trap in the bears off the moving average. We use failure patterns. I would say probably 90% of the trades that you'll take in a range market like this will be trapping in the bears and using their stops, right? Again, if they break down, if they hold that pullback to the 21 moving average and jump off the moving average. You know what to do now, right? Channel off that low, channel off that high, right? And short that sucker off that first test. Remember that? First leg, third leg, right? I'm obviously just, I'm going a little bit quicker on this now because we've covered a lot of these details already. Or it pops lower, it doesn't pull back, right? And it begins to grind. You know what I'm going to say here, right? Find that channel and hit that first test off of that high, right? First leg, third leg. Okay. So this is all very much repeating myself here on this. I don't want to waste your valuable time on this. That's the game plan, right? If we go lower here. As we go higher, it's a very bull market right now. So how do we call a top? How do we trade that reversal? There's two ways to do it. One is the crown reversal. Give the buyers the benefit of the doubt. Let them try a couple times. I'm not in the business of calling tops and bottoms. Okay, if you're having a problem, by the way, I get a lot of emails every week about this. How do I get consistency in my results? The way you get consistency in your results is if you're trying to go against the trend, well, the way you get consistency is give the momentum direction the benefit of the doubt, right? Don't pick tops and bottoms. Let those buyers dig their own grave because they may easily pick this thing and keep it going here. We're still very bullish, right? But once those buyers, once they try a couple times, then we know we've got their stops right where we want them. Now all we need is a nice strong signal and I get that dump going right back down into that trading range, right? And again, what you want is you want that short signal. You'll learn a lot more about short signals and the entry signals inside that free trading course. Most important thing though is when we get a strong pop up like this, once, twice, and grab that trap. Okay, now we talked about why traps are so important in last night's video. If you want to learn more about this crown reversal pattern, definitely check out last night's video. I'm a little bit late on time right now. I'm not going to cover it all right now, but that will be your trap entry there. And then remember, like I mentioned earlier, the amount we go above is the amount we're going below. And so what do, right? What do? You go out, you find that new channel, and you go grab that first test, right? The amount we go above, the amount we go below. That's a really, really easy target most of the time, right? And you will hit the top of that channel, okay? So keep that in mind as we go higher. Now, just like on the S&P, we may pop up, the buyers may go in, they may pull back and retest, right? Because again, right, that's what buyers want to do. Anytime we see a strong move, we expect to pull back, trap in those bears, and retest that high. Once they retest the high, what do? Once we retest the high, show us you mean it, right? Show us you want more on this. If you don't, right? If the buyers come in and struggle off of that high now, that range is still very much intact, and we can use a double top reversal for that short back down again, right? Or two, again, remember, we talk a lot about these because it's news tomorrow. We pop up and we V-top, right? V-top it right back down. These are pretty easy, right? These are pretty easy, okay? Not easy to short the pop, right? Because you can't, again, I'm not going to advocate selling right into a big spike like that. I don't care how much resistance is overhead. It doesn't matter, right? The most important thing is, remember, if you're not getting consistency in your results, think about what direction are we going in right now? Who has control of this momentum, right? I'll teach you how to use the 21 EMA to know who has control, but focus on trying to go with the direction of that momentum. And if you're trying to go against it, use that 2-try rule, right? Go up, 1, 2. That will help you use the stop losses, right, to fuel that reversal, okay? That will give you the edge, right, rather than going with the trend. Anyways, it may pop up or make it that little pop, right, in that grinder going down and make it the reversal going lower. Last but not least here, what would some breakout patterns look like? What do breakout patterns look like here? There are a lot of different types of breakouts. One of them is a 1, 2, 3 breakout pattern. We talked about this earlier as a reversal. If they hold that pullback and they jump, right? Hold it and they jump. We then mark off that high, mark off that low. We talked about this on the S&P on the short side. This is that same idea, right? So first leg, third leg going higher. Remember, we're not going to buy that first pullback, right? We buy the next one because that right there, that's an 80% winner, right? The one right here, that's a 45% winner. You're more than welcome to take a 45% winner, but again, if you're having trouble with getting consistency in your trades, I wouldn't look at that one, right? That's why I personally don't look for those, right? I want that easy bag of cash that all I gotta do is walk over and pick it up, right? That's what I want, and I'm willing to wait for it, right? That's a FOMO trade right there, right? That's a pro trade right there, at least in my eyes, right? At least in my eyes. Right? And I'm sure some people are rolling their eyes right now saying, no, I have some special indicator that shows me this on, yeah, let's see what it looks like in 30 days from now, right? Indicators are very inconsistent. They oftentimes stop working and you'll give back all the gains. Anyways, next one here is a pop-up. A grind. You know this one, right? It's a pop and grind channel. It pops up. The grind is the giveaway. That's the proof. We go out, we find those swings, right? Bear trap, failure, pullback, again, first leg, third leg as we go. Another very common breakout is going to be a breakout pullback, right? So we pop up, right? We really rip higher, but we pull back right away. Okay, what do we then? We go out, we connect these highs, we find that low, right? We basically find a new channel, right? We get below that 21 moving average, we trap in those bears. This is a very common breakout, right? And we go higher from there, right? We don't chase it as it goes higher. We simply find some new channels off that high, mark off that low, and once it pulls back, remember, anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that high. So we see those bears getting in below 21 moving average, right? We're always going, oh yes, right? Stops are right there, pullback pattern right there, strength trade, right? As we go higher. I call this the price action cycle. You'll learn more about that in that free trading course. All right. Some levels overhead on oil, right? 79.5. And again, you'll see more of the bigger levels that I'm going to keep in my radar. Again, I put that extra chart down the description here on oil. All right. What do you think, right? What do you think? Am I crazy tonight? Do you disagree with everything I'm saying here tonight? I would love to know why. I have no ego whatsoever. The markets are very humbling. And so I'm always open to new ideas. I would love to hear what your vision for tomorrow is, right? So let me know in the comment section below while you're down there. Grab the link to that free trading course if you haven't taken it already, right? Learn the strategy, get making money on your own account, and soon enough, you'll be trading with us sometime soon in our trade room at 8 o'clock Eastern time. As I mentioned before, please be careful tomorrow, right? Please be careful tomorrow. Promise me you're not going to go gambling on that CPI number, right? Save your bullets. Because remember, the day after that big news, the day after that is known as Reaction Friday, right? A lot of professionals are not going to trade very aggressively tomorrow because of that craziness. They will come back, hit it hard on Friday. So promise me you'll save your bullets, right? Don't go blowing your account tomorrow, right? Give yourself a fighting chance. Live to trade another day. And remember, tomorrow morning, 8 o'clock Eastern time, will the dust settle and we'll pick up the pieces and trade the reaction. Guys, the easiest way to get help from me is to call the office or use live chat. That's the fastest way. I would love to hear from you, though, in the comment section below. So hit me up there if you got any questions. But again, if you need help getting into the free trading class or join as a member or information about the best brokers or whatever, right? The easy way to do is call the office. I'll be here to help out every sort of process. I know I go pretty fast in these videos, right? But we'll slow it down. We'll talk things through and we can make sure you have all the tools you need to start really getting serious about your trading business. All right, guys, I'm going to wrap things up here for now. Fantastic job today on those bear traps. Got a lot of great emails, so congratulations on that. Tomorrow, the fun starts again. We'll see you guys tomorrow morning in the trade room. If not, same time, same place tomorrow evening. As always, guys, be well. Be nice to each other, will ya? And you better be here tomorrow, all right? All right, guys. Adios, amigos. Bye-bye for now.